Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 7th of August. I'm Caroline Hepke in London.
And I'm Stephen Carroll. Coming up today, US President Donald Trump's new tariffs come into effect, pushing US import duties to their highest since World War II.
The White House warns of a 100% tariff on semiconductor chips, with carve-outs for companies who manufacture in the US.
Plus, dreaming of your own off-the-grid island? A tech entrepreneur's converted fort off the Welsh coast goes on the market for £3 million.
Let's start with a roundup of our top stories.
The next phase of US President's global trade tariffs have come into effect, pushing American taxes on imports to their highest level since World War II. The European Union, Japan and South Korea all negotiated a rate of 15% on their exports to the United States. Other countries were simply assigned rates, which range from the UK's 10% to much higher. More levies are yet to come, with President Trump saying he would double tariffs on Indian goods to 50% as a penalty for buying Russian oil. Bloomberg's Jill Deesa says these so-called secondary tariffs are less about trade and more about geopolitics.
It does seem like India has become kind of collateral damage in this ongoing pressure campaign that Trump's trying to launch against Russian President Vladimir Putin. Part of that big, idea of applying these secondary sanctions or tariffs on, nations that purchase Russian oil to try to get Putin to end Russia's war in Ukraine.
Jill Deesa added that President Trump said he might also punish China with additional tariffs over its purchases of Russian oil. Trade negotiations with China are still ongoing, along with the US's other two largest trading partners, Mexico and Canada.
Now, the US president declared plans for a new 100% tariff on semiconductor imports. Standing next to Apple CEO Tim Cook in the Oval Office, Donald Trump says that he is bringing manufacturing back to the US.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge.
Now, Trump's surprise declaration further upends the global electronics supply chain. Tech companies, including Apple, TSMC and Nvidia, have pledged to spend more than $1 trillion collectively in the US since Trump returned to power. But the levies may still have major implications for the price of consumer electronics in the US.
Well, meanwhile, America's allies are still grappling with the shock caused by the levies. Switzerland's President Karen Keller-Sutter left Washington after a 2-day emergency trip, having failed to secure better terms. The European leader did not meet President Trump, instead only talking to Secretary of State Marco Rubio. Swiss goods face the highest American tariff of any developed nation at 39%. Bloomberg Economics estimates that if the rate comes into effect, including on pharmaceuticals, it risks cutting up to 1% of Swiss economic output in the medium term. The Swiss government is holding an emergency meeting later today. Meanwhile, despite agreeing a trade deal with President Trump, Japan is also trying to get clarity on car tariffs. Tokyo says Japanese cars were exempted from the levy, but that detail was not on the executive order.
Now, 3 Fed officials have voiced fresh concerns over the US labour market, pointing to a rate cut in September. According to the San Francisco Fed President Mary Daly, the data shows policymakers will need to alter borrowing costs soon.
The labour market has softened. And you can see this everywhere in the U.S. economy and here as well. And I would see additional slowing in the labor market as an unwelcome sign. So all this means, as you put it together, that I think we'll likely need to adjust the policy rate sometime in the coming months.
The Fed's Mary Daly speaking there. Speaking to CNBC, meanwhile, the Minneapolis Fed President Neil Kashkari also expressed worry over the slowdown showing up in multiple data points, adding that he expects 2 Fed rate cuts before the end of the year. The news also comes after fellow Governor Lisa Cook said that downward revisions to the jobs data for the last 3 months were typical of turning points in the economy, in her words.
Markets are expecting an interest rate cut from the Bank of England later today. The news comes as members of the Monetary Policy Committee contend with a slowing economy and a jobs market rattled by higher taxes. Bloomberg's Tiwa Adebayo has more.
Markets and economists are expecting the UK's central bank to cut interest rates to 4% this afternoon, a 2-year low. The 25 basis point drop would be in line with the BOE's current once-a-quarter pace of easing, but policymakers have remained cautious amid a fresh inflation spike. Concerns over the economy are also rising after it faced back-to-back contractions and a hiring slowdown over spring. The decision will likely expose divisions amongst the 9-member committee panel, with experts predicting a 3-way split. In London, Tiwa Adebayo, Bloomberg Radio.
President Donald Trump says there is a very good chance that he will meet Russia's Vladimir Putin and Ukraine's Volodymyr Zelensky soon in another bid to broker peace between the two countries. Trump spoke to reporters in the Oval Office hours after talks between Putin and US Special Envoy Steve Witkoff in Moscow.
We had some very good talks with President Putin today, and there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
President Trump speaking there after he informed allies in a phone call on Wednesday that he is positive about the possibility of a ceasefire in Ukraine. In terms of sources speaking to Bloomberg, he also suggested that Putin would be open to peace talks in exchange for discussing land swaps.
Well, those are your top stories on the markets this morning. The MSCI Irish Pacific Index 9/10 higher this morning after those latest tariff announcements, particularly to do with chip makers, have been giving the markets some optimism. TSMC shares in Taiwan are up by 4.9%. Looking ahead to the European trading session, Eurostoxx 50 futures are up by 0.25%. Wall Street futures are 0.2 higher for S&P E-minis as well. The 10-year Treasury yield this morning just up a basis point at 4.24%. The Bloomberg Dollar Spot Index is a 1/10 of 1% weaker.
Now in a moment, we'll bring you more on the latest US tariffs coming into effect. Plus, we'll dig into the market reaction, particularly to the announcement around chips. But first, something we've been laughing about and thinking about all morning, really. A bit of an escape from all the tariff news. Sarah Rappaport's always gets the best assignments, doesn't she?
Well, she's been writing about a private island for sale off the Welsh coast. It's home to a Victorian-era fort that's been renovated into a 5-bedroom home. It's got things like a rooftop bar. Ooh. It's also fully self-sufficient with generators, solar panels and heat pumps. Now, the island is currently owned by the tech entrepreneur Mike Connor, who bought it in 2017, brought it back from dereliction. He says he's had some great parties on the island over the years. He also describes it as a really expensive train set.
Yes.
I think that's
it's got a helipad on it as well. You have to add that in there.
I think there's been quite a lot of work that's essentially had to be done to try and get this island back to, I suppose, the state that it's in now. But it is on sale, Thorn Island, and the current price is £3 million.
I thought that was quite a snip, actually. I must say that I've been doing news
researching
podcasts.
islands.
Well, no, I just had seen the island when it was for sale. I think everybody in the country saw it because it was the most popular or the most viewed for sale property in the UK in the year that it was up for sale. I think it was 2017 or 2018. So I actually thought £3 million after all the investment that must have been needed. It
just made me think of the famous Five, to be honest. The idea of there being an island, with a fort on it.
Pembrokeshire is so beautiful. A view of that coast must be amazing, yeah.
We'll put a link to Sarah Rappaport's story in our podcast show notes. But let's bring you more now on our top stories. The latest round of Donald Trump's trade tariffs have come into effect, raising the rates faced by dozens of countries around the world. Switzerland's president left Washington without any change to the 39% rate that their imports will now face in the US. Donald Trump's already threatening further moves on chips and higher tariffs on India as well. Let's speak to Bloomberg's Ramzi Al-Rabaki for more on all of this. Ramzi, good to talk to you. Hi. First of all, just to put us where we are with these new tariff rates coming into force today, how big a moment is this in Donald Trump's trade offensive?
He's in one sense, it's at least some certainty for the world. He's been talking about these things since he got into office. He had this big announcement in April, delayed it till July, delayed it again. Finally, at midnight in the U.S., New York, they have gone into effect. So we kind of know where everything lies. But as you guys have been talking about, he's still full of surprises. There's the issue with India and oil. There's this random announcement in the White House about 100% tariffs on chips unless they're produced in the United States, or at least a company promises to produce in the United States. There's the shocker on Switzerland. They still haven't settled China and Mexico and Canada, which are the biggest trade partners. So in one sense, things feel quietly settled, but there's still some very big questions out there, and as I said, he's full of surprises. So everyone's still on their toes.
Yeah. Okay. So let's focus in on one of those then, the 100% tariff on chips, with some very key exemptions. Is it good or bad news for chip makers?
Well, you even look at the story that Bloomberg and others are writing right now. We even have people they say they're scrambling to make sense of what this threat is. It seems good news for a lot of the names you would know off the top of your head, like a company like Apple, Taiwan's TSMC, Samsung in Korea. All of those governments, those companies have said, look, we're making investments in the United States, or we're going to. So by the reading of what he said, it's like, well, they should be exempted. So it's not entirely clear just yet how big of a hit it could have to some of the biggest suppliers. What he's demanded was sort of already in train. Even before he came into office, if you remember, under the Biden administration, there was a CHIPS Act that was encouraging chip makers to build in the United States, and a lot of them had already made commitments to that point. But again, it probably has just as much to do with Trump's interest in being splashy and having a big number out there and really hammering home his point that he wants companies to build in America for American consumers and American jobs.
So this could potentially, as you say, have some good news for those chip makers that are carved out from that tariff threat. But the other threat that we had from Donald Trump is to increase the tariff rate on India from 25 to 50% later this month. This is linked to its purchases of Russian oil. Is there any hope for negotiation, do we think? We've another 21 days before that higher rate would come into force.
Gosh, that's another wild card that we're trying to get our head around. If we go back a little bit after the invasion of Ukraine, that's when the U.S. and the EU really tried to crack down on Russian energy, and they had this policy of trying to cap the price on Russian oil, but still trying to keep it onto the market, which means there's a lot of oil, so gasoline prices don't go up, but Moscow and Vladimir Putin get less money. A big buyer during all this was India. The U.S. knew it. They sort of just let it slide. India saying, we need the cheap oil. We have a growing economy. The U.S. thinking, well, we need a counterweight to China, so we'll all get along here. Now, Trump thought he could end this war in Russia very quickly. It's going much more difficult than he thought. Vladimir Putin is a lot more stubborn than he was expecting. So he's been ramping up his pressure on Putin. And I think that's where he probably saw an opportunity to make it seem like he was serious. And he's kind of using India as the outlet for that. What sort of upside he's going to get is unclear. Vladimir Putin and Russia have been very, very resistant and sort of they've adapted well to the economic isolation the West has tried to put them in. And this has obviously very much angered India, so much so that even, the Modi's opponents are piling in and backing him in a sense, saying this is just straight up bullying. But you're right, there's time to sort this out. And as we've seen, Trump can change his mind very quickly, very dramatically, and it could be as simple as one phone call. We saw the Swiss apparently got a really terrible deal because of a bad phone call. It could be that a nice phone call with Modi sorts it out, or a nice phone call with Putin. But it puts the oil market in a tricky situation. It puts India in a very tricky situation. And as I'm sure, as you might have heard as well, in the questioning yesterday in the White House, Trump even said he might do the same thing for China, which, again, it just is throwing another huge wrench in the works in that trade relationship. And as I'm sure you know, China is another massive buyer of oil globally and from Russia.
Yeah, President Trump saying that may happen. But of course, it also sounded fairly tentative about China. Let's see what happens on that point. Ramsey, thank you so much for being with us. That is Bloomberg's Ramsey Al-Rikabi there joining us, taking us through the latest round of trade tariffs.
Well, let's think about how markets are reacting to that trade news now. The exemptions that Donald Trump announced from his planned chip tariffs has boosted shares in Asia. And our markets reporter Valerie Teitel is with us now for more. Just talk us through what we are seeing in terms of reaction to this latest set of announcements, Valerie.
Look, huge relief when it comes to the semiconductor. Yes, it was a big flashy number, 100%, but it exempts anybody who is pledging investment in the U.S., is pledging to move their supply chain more to the U.S. So we're seeing the likes of TSMC. Those shares are up 5% in Taiwan trade. Even the likes of NVIDIA traded higher in post-market, and the likes of Apple as well. Tim Cook obviously being in the Oval Office with Trump when he made this announcement. Apple is going to get that carve out, that exemption too. So Apple shares traded nearly 3% higher in post-market trades. This is just another tariff now, Stephen, that we don't have to worry about. The tariff threat on semiconductors seems in the rearview mirror. The exemptions, the list of both foundries and chip designers who have pledged investment in the U.S. is really quite extensive. You have TSMC, Applied Materials. Apple has talked about moving some of their supply chains to the U.S. NVIDIA as well. There's this big Phoenix plant that TSMC is building in Arizona, and many chip designers have voiced support of using that production line as well. So the carve-outs are quite enormous on this one, and I think that surprised the market in quite a positive way with TSMC up some 5% in trade in Taiwan.
In terms of the US threats of tariffs over buying Russian oil targeting India and China, how's that affecting oil prices?
This is a really hard one to put your finger on because secondary sanctions are very much known to be very hard to enforce. And honestly, the oil price yesterday was way more affected by reports that Trump wants to meet with Putin and Zelensky. So we actually saw oil fall at the end of the session yesterday. So it does seem like there's two things pulling the oil market. It has rallied this week on worries of these secondary sanctions, but then yesterday was really much on a back foot on hopes of a ceasefire when it comes to the Russia-Ukraine war. We did have WTI falling over 1% by the end of the close in yesterday's session.
And just in terms of how markets are thinking about the tariffs more broadly and the effect on the US economy, interesting comments from Federal Reserve policymakers, Mary Daly and Neil Kashkari among them about interest rates.
Exactly. A dovish shift from some of these Fed members voicing some fresh concerns on the labor market. Mary Daly, basically this is now her second time around that she's mentioned the labor market is cooling. Kashkari mentioned that as well, saying cutting sooner rather than later might be better than waiting because of this cooling in the labor market. We also heard from Lisa Cook, who is a Fed governor, a current voter as well, saying that it is concerning. The latest jobs data is concerning, and those big revisions can be somewhat typical of turning points in the U.S. economy. So this dovish language from the Federal Reserve members, it has kept the dollar soft. It's been weakening for 5 straight days. It's now down 1.5% since Friday's payroll report. But when it comes to what's priced in the front end, I think it's fairly justified. We're pricing still around a 90 to 95% chance of a September cut. So at least no one for now is talking about a big jumbo cut when it comes to September. That would be something that would really shift the market. But Stephen, remember, we still have another CPI print and another payroll print before we get to that September meeting. So that might keep Fed members from sounding any alarm on a jumbo cut until we get more data.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.